Welcome to another weekly review video. In this video, we will be reviewing previous week performance across these markets. First of all, we have dollar index. Then in major currency pairs, we discuss euro dollar and pound dollar. In indices, we have NQ, ES, and YM. And then in metals, I trade gold and silver and post my updates and forecast on gold and silver only. As far as the weekly forecast is concerned, you can stay tuned with our Discord server to get daily updates across these markets. The previous week performance, our previous week key event was FOMC on Wednesday last week. As you can see, this was my final verdict on dollar index prior to FOMC, about 20 minutes before FOMC. So before FOMC, we have this price action on dollar index where we have equal lows below, then price expanded, and then we have consolidation, manipulation through a Judah swing, taking our range high. We have displacement, and then price created just about equal lows in one case. We have displaced above, but not enough displacement above this high. So this was my final verdict. As if this candle closes below the up close candle, FOMC will be bearish. This will be our draw. And same is the case for euro dollar, pound dollar. That will be bullish. These assets will be bullish. So this was how dollar moved. Then we have in majors, we had euro dollar and pound dollar. As you can see, Monday was one of the best day this week because we had our draw clear, and on Monday price delivered towards these lows. This was my draw. We had a nice SMT over here. I guess that was last week Friday. Sorry, I'm very sorry. This was Monday. So this was Monday. Literally posted this. Keep an eye on euro and geo. And this previous week Friday's low was my draw because we have equal lows. Then as you can see, it was a classic clean reversal with SMT, PSP, and reversal, all the stuff. On FOMC, this was my draw. Previous day high, and Monday high on euro, Monday high on GU. Unfortunately, I had a stop loss on GBPSD on FOMC. What an expansion! Amazing. On GU, I had a stop out. This was, I guess, euro dollar. I entered on 3-minute time frame, and then this is going to be my stop out on GU, which was like it was 7 pips stop loss, manageable. This was euro dollar result, and as you can see, here sides the GU. Then we had indices on FOMC. Where is FOMC? This was the FOMC event. Prior to FOMC, we are bullish, and then FOMC just had to deliver one-sided. This is driver pairing protocol, by the way. Then we had gold and silver. Prior to FOMC, we have clear bullish structure. As you can see, look at the closures. We had this candle closed before FOMC. This is the FOMC candle. So CISG already happened. We have range low, manipulated, then reversal already occurred. So FOMC only had to expand on buy side. These were the executions. And then on Thursday, I guess, this was a setup. Basically, I post the best possible setup. Not every day, but on Wednesdays, on Tuesdays, Wednesdays, and Thursdays. Across any market that I see is the cleanest price action. So that was on gold. You can see all that is gold. Let me take you to the trading charts. So this was our Monday opening. Price closed above the CST, and we have a gap. As you can see, we have a gap over here. In this gap, price just mitigated the gap, tap the open price. We have a range high, a range low. Okay, CRT, as you can see, we have a range high, range low. We have been trading inside this range. On Monday, we have taken out this previous candle's low, rebalance this gap, and then again closed inside the range of this candle, which is Friday, Thursday's candle, previous week candle. Then on Tuesday, we had the manipulation of this range. We have C2 closure, and on Wednesday, this is the FOMC event. And following day, Thursday, we have delivered below this low, and Friday was like needed to retrace and then expand one more time. So that was dollar index price action. As you can see, we have a buy program. Every downward scanner is going to be respected if we are bullish until this liquidity. And I posted this market maker model beforehand. You can go check on Discord. This was a market maker sell program. Then we have a buy program, and in this buy move, every downward scanner is going to be respected until and unless price don't take this high. Once we took this high, price remitigated this area. We have a smart one reversal, and then this is the FOMC event. Clean one-sided delivery. And on Thursday, we had a rebalancing of this gap. This is not a gap, by the way. This is a liquidity void. So whenever price leaves behind liquidity void, price try to fill it fully or partially through this pattern of creating higher highs without any momentum in this move. We had another sell side move, and this is the Friday price action. Then on euro dollar and pound dollar, as you can see, prior to week opening, we are opening at this point, price taking previous week low, which is a major liquidity. Any previous day low or high, previous week highs and lows, and previous month highs and lows are our major liquidities. To previous week low liquidity, so previous week or this swing high is going to be our draw. Same is the case on pound dollar. We had a weekly CIST after taking this major liquidity. So we had this CIST on weekly time frame. We have a gap over here, just about at a discount end of the price. So we have a discount gap, and then price taken previous weeks. So if you look at this candle does not support it, did not support expansion. So the next candle had to sweep this low to then expand higher. Now we have closed above this high, so this is going to be our draw, and eventually these equal highs are going to be our draw. Okay, so stay connected to us at our Discord. So I will be posting updates. You can get updates on daily basis. On daily time frame, this was Monday. We have been like, this was a gap. Price traded back inside this gap to take these equal lows. We have already swept a range low. This was a range low, high, inside low, and then high. So we already swept a low. On Monday, we have a strong opposite candle. If I have to reverse, if I want to see a reversal, I want to see some sort of candle like this. As you can see on dollar and euro dollar, we have kind of, you can somehow say a PSP depending on the body shape. Then on euro, we have equal lows, and euro dollar is clearing these equal lows on Tuesday. Pound is clearing equal lows on Monday, and then on Tuesday we have seen a C2 closure. Wednesday had to expand, Thursday had to follow. So this was kind of classic weekly reversal pattern, classic week expansion, and then on Thursday we will retrace inside this candle's range about 50%. It's better that price does not reach the 50%. If it reaches, it's still okay, but it is good if it stays above the equilibrium. This was the draw on euro, and the draw on pound is currently pending. If we switch to our time frame for intraday profiles, this was Monday. We had an SMT here. As you can see, this was a very nice trade. I guess this was my best trade of the week on euro dollar and pound dollar. Literally traded in this candle inside this reversal towards these lows, and same here. Then we have been like consolidating, and whenever we consolidate below old lows or above old highs, this is not just a market phase of price consolidation, it's accumulation. Whenever smart money accumulates positions, long positions below old lows, it has to distribute in this way. You can go check trading charts. Whenever you see accumulation below or lows, the expansion will be this volatile, this explosive. Same is the case on euro dollar. We have accumulation, manipulation of the accumulation, expansion. It was like an extremely good trading opportunity, but on these assets, I traded only on Monday, and I think I completely skipped Tuesday, then traded on Wednesday just before FOMC. I again completely skipped euro dollar and pound dollar on Thursday and Friday because I look at the cleanest opportunities possible. On Thursday, I had the cleanest opportunity on gold, which we will break down, and then the indices. So the next asset is going to be gold. On daily time frame, this was our Friday closure, last week Friday. It is a valid C2 closure inside a gap, hitting a roadblock, but this was my personal key level. I wanted this open price to be tapped to then expand higher. So on Monday, we closed inside Friday's range, C2 closure, Tuesday manipulation, same as you can see on your pound dollar, an aggressive against the bias candle. So we had an aggressive candle stepping below old lows and tapping a key level. In this case, this down close candle open price. On Wednesday, we took this low, previous day low. This is one of the sweetest SMTs I look for, in which one asset takes previous day low and the correlated asset creates a failure swing, and hourly CSD confirms this draw. So as soon as this SMT confirmed, this was going to be our draw. On Wednesday, price delivered, but it engineered this high. Again, one more liquidity, as you can see, just about this high. On Thursday, that had to be continuation day because price is reversing on Tuesday and Wednesday. So Thursday again delivered on buy side, and Friday had to return back inside this range, the weekly range from this low to this high. Same is the case on silver relative to gold. Equal of spending, an aggressive thrust candle, and then failure swing to then take this Wednesday high, which was in itself an engineered liquidity on gold. That is the case on hourly time frame. At the start of the week, we have been like in a bearish structure from this high to low, and price is creating sell side expansions and consolidations, expansion, consolidation, so on. So below this low, we started consolidation again. So this is going to be our accumulation. Smart money is accumulating longs below or lows to then distribute them above these highs, the old highs. We have this high and we have this high over here. As you can see, if we have smart money reversal prior to FOMC, this was a candle closed before FOMC. So the FOMC had just to expand on buy side. We had this expansion. So once this expansion completed, we will expect a phase transition. In this phase transition, we are expecting a retracement because we have a smart money reversal. The retracement is going to be completed once it hit this order block inside this gap. We had another expansion higher taking this high, and once this move is completed, we can now again consider another phase transition. On Friday, I took a couple of losses here. I basically wanted this gap to be inverted, but I didn't got it, although I entered prematurely inside this range. But I was stopped out twice on gold. You can see the trades are posted on Discord for every asset I have been trading over the week. Then I traded the invalidation. What was the invalidation? We have this range low to this range high. Basically, this is Thursday's range, and just above the equilibrium, we have this inversion. I wanted it to be inverted to then continue higher, at least till these up close candles, but we didn't got it. Once price was displacing on the sell side below these lows on 15-minute time frame, we played the invalidation till this low, and it was like a very good trade, but nonetheless I got 2 stop losses here. So that was gold price action. And just before the day, this was Thursday price action. basically a market maker model. We have this engineered high on FOMC event. So this was Wednesday's high. We have been retracing inside this range. Once price took an internal low, so it has to reprice above external highs. As you can see, we have a smart money reversal, and if you can apply fib on it, you will see 2 to 5, 2.5 or 3 deviations, and this is our target. As soon as price reversed, you can see the downward candle being respected. This was posted on Discord, which I showed you, and this was our draw. It was on 9 a.m. continuation. That was gold, and this week on indices, I didn't do any significant, just on I guess FOMC and on Thursday. So we are opening here on Monday. Already took these lows. No, I guess so. These were equal lows on NQ. This was my draw on Monday. On Monday we took these lows. I guess Friday. Okay, Friday closed below, but still just minorly. Like same is the case with gold, where gold engineered liquidity. So that was my engineered liquidity. Monday had to sweep this low again. Monday, Tuesday, Wednesday reversal. In FOMC it was wild. I will show you the price action on our time frame. And on NQ, ES and YM, let's switch to our time frame. On Monday, price aggressively short below these lows, then again selling off, and on Wednesday on FOMC event, this is our FOMC candle. Price took these highs. We had an SMT with ES and YM. Here is YM, ES, sorry. We had an SMT, so YM, ES crashed. Same is the case with YM. I just traded before FOMC. I just traded NQ and ES because NQ was the strongest asset, ES was middle asset, and YM was weakest asset. That's why I avoided to trade YM. It had an expansion like a spike high, then this move lower. If you look at the NQ and ES prior to FOMC day, ES is bearish. It has an expansion, retracement, one more expansion, and that was my Thursday trade where I wanted a reversal because we have below an old low, we have tapped this old block, failure to manipulate, failure to displace, and once price closed above this high, this was my draw. All the equal highs, these were designated to be taken, but on FOMC there was an SMT and we had this move lower. Same as the case on NQ and YM still, because it was the weakest asset, its highs are still pending. This was some sort of scalp setup on 9:30 open on YM, which I played on 1 minute time frame. So this was my weekly review. I wanted a reaction off of this order block, then wanted a close above, so price failed to manipulate, and it was a sign of classic signature of buy side continuation till towards these highs. Same is the case with NQ. Why I'm still struggling because it was the weakest, but still it's dries over here. As you can see, we have a CST with displacement. Price came back to mitigate this. Now we are going higher. That was my weekly review. If you want to see the trades, you can go check on Discord. All the trades have been posted here. The lessons which we learned this week must be posted in the lesson sessions, and you can find pretty much everything here. Thank you very much.